Welcome to The Art of Medicine, the program that explores the arts, business, and clinical aspects of the practice of medicine. I'm your host, Dr. Andrew Wilner. When I care for a patient, I need to know when I've reached the limit of my expertise and need to call in a specialist. That's definitely the case when it comes to my interactions with the Internal Revenue Service. Well, today, I'm asking two specialists, Ben Nanney and Jarin Dana, both CPAs, to share their insights on how tax laws affect physicians, especially locum tenens docs. But before we get started, I'd like to thank our sponsor, locumstory.com. If you're considering locum tenens, either full-time or on the side, you probably have a question or two, or 20. Fortunately, locumstory.com has the answers you need. It's packed with unbiased information and advice from physicians. Locumstory.com has nothing to sell. It's simply an information resource. You'll find super handy tools that let you see locum tenens trends for your specialty and compare different locums agencies. There's even a quiz to help you decide if locums is right for you. Locumstory.com is the perfect place to start if you want to learn more about locums. That's locumstory.com. And now, without further ado, I'd like to introduce my guests, Ben Nanney and Jarin Dana. Welcome.
Welcome.
Good to be here.
Thanks for having us.
Yeah.
Oh, it's my pleasure. You know, you have both been on the program before and did a great job, and we're still willing to come back. So I think that's really nice. And I felt that you guys are experts and are good communicators. And physicians, learn a lot and study a lot. And but somehow the world of finance, in neurology we have this term called lacoon. It means lake, usually referred as a hole in the brain. And finance tends to be a lacoon in our education and something that kind of have to learn, after we graduate, usually the hard way. So you guys are going to help make it easier. To get started, Jarin, just tell me who you are and what you do and why you're an expert.
Well, my name is Jarin Dana. Appreciate you having me back on. The last time I was on, as you know, Dr. Wilner, I was here representing NALTO, which is the National Association of Locum Tenens Organizations. I'm the president-elect there. But as you mentioned, I'm a CPA. That's what I grew up doing, went to college for. Started in that business, and then started with my partners a staffing business, Fusion Healthcare Staffing, based out of Sandy, Utah. So I'm president-elect of NALTO, CPA, and the CFO of that company. And so that has given me sort of a unique perspective on tax issues specific to locum tenens physicians.
That's great. That's great. Okay. And Ben?
Yeah, so I apologize up front. Kind of battling a cold. But so own a business, locum tax. I've been doing that for about 2 years. Background before that, I did some financial planning work, worked for an accounting software firm, worked in some different public accounting firms before I kind of chased my dream and went out on my own. So I focused very exclusively on locums for the past 2 years. And I feel like I've learned a lot in these 2 years. So hopefully we can share some of it between Jarin and I.
Well, just from my point of view, you look very trustworthy because I can see you're in your fancy corporate office there.
Oh yeah, world headquarters.
With
yes.
with the view, of the skyline, and but you actually specialize. All of your clients are physicians, right?
Yeah, outside of just a few friends and family, yes, it's exclusive, and not just physicians; they're locums.
And locum. So you're very familiar with the particular kind of tax situation that locum doctors are in. Well, so why don't we talk about that? Either one of you, what is special about being a locum tenens physician, which is only a few percentage points really of the million physicians in the U.S. Jarin, the last number I saw was about 50,000 locum doctors out of 1 million licensed physicians in the U.S. So 50,000 is a lot, but it's not a lot compared to 1 million. So they're really a minority. What's special about their tax situation?
Well, you had mentioned about 50,000. That's on the physician side. There are several staffing agencies that will also 1099 their CRNAs, NPs, and PAs. And so there's a little bit of inconsistent treatment on that nationally from firm to firm. But on the physician side, it's pretty much, 99% of staffing agencies will treat a physician doing locums as a 1099 independent contractor. And so that's point number one, right? That's going to be a characteristic that opens up a ton of tax issues, but also tax opportunities. I mean, some doctors will initially think, oh, I don't want to do locums because in April I had to pay all these taxes. Well, all that tells me is they didn't do any planning. It was poor planning, because there are certainly opportunities to help take advantage of the fact that you're an independent contractor. And there's definitely some tax strategies that can be employed that we'll talk about.
All right, quick step back. You use the term 1099 and you use the term independent contractor. So what is different about that than the physician who works for Kaiser and is on a salary?
Well, I mean, unless your head has been in the sand, the gig economy with the Ubers and Lyfts, I mean, worker classification is a very hot topic nationally. In fact, the PRO Act, which was some legislation that got introduced in the House, had this ABC test from California, and it really just comes down to worker classification. So if I'm a W-2 employee with Kaiser, they are doing all of my federal and state withholdings. Obviously, I would have to pay my percentage of the payroll taxes, but Kaiser pays the other half. And so that's sort of a benefit that you would see as a W-2 employee. As an independent contractor, 1099, there is no employer doing withholding on your behalf. Therefore, you're responsible for both sides of the payroll tax, which is commonly referred to as self-employment tax. And that's kind of where this concept comes in. And that's really the big difference and the big tax difference between the two worker classifications.
Okay, Ben, so that sounds like a major downside to being self-employed, the opportunity to pay more tax, because I have to pay the employer tax and the employee tax. So where's the upside?
So there are, like Jarin, there are more planning opportunities. And I think a lot of that kind of starts with the business structure itself. That's a big question that most people have when they're first starting out with locums. Do they need to do the sole proprietor? Do they need an LLC? Do they need an S corporation? So maybe if you're okay with it, we can kind of jump into that and talk through kind of how that works. Jarin might disagree. I probably go against the grain on this advice, but at this point, kind of background, at this point, I've talked to roughly 175 locum physicians, and so not a huge sample size, but I think enough to make some reasonable judgments. And my general advice for most people, so if you're listening, my default choice is a sole proprietor. It's not an S corporation. And I'd kind of like to explain why, because I know that's most people come to me and they're like, I need an S corporation. They've already started an S corporation. They already elected it. So a sole proprietor by itself, the way you become one is really simple. You just have someone like Fusion pay you your first 1099 check, and by default, in the IRS's eyes, you immediately become a business owner, a sole proprietor. And so as a sole proprietor, you're going to get all the standard business deductions. So the unreimbursed travel, the health insurance that you're paying for out of pocket, potential HSA if you have a high deductible plan, the same retirement plan options like a SEP IRA and a solo 401k that we'll talk about here in a minute, I think. Licensing, DEA fees, the list goes on. There is no real big deduction that you can get with like an LLC and an S corporation that's off limits as a sole proprietor. And that's typically it's a big misunderstanding of a lot of people. They assume they have to have an LLC, they have to have an S-Corp to get these business deductions. That's not true. So sole proprietor is generally my default. It's simpler, and also from a few more perspectives. And again, Jarin can kind of pick this apart. An LLC, I'm not a huge fan of for locums for two reasons. Number one is in and of itself, it doesn't provide any direct tax benefits at the federal level. So there's no special business deductions, no special retirement plan options you get with an LLC. Some people say, well, that's fine, Ben, but I get coverage, I get liability protection for malpractice. I'm not an attorney, big disclaimer here, but you're not going to get any liability coverage from an LLC. So if you have an LLC, you're on the locums assignment, you are, heaven forbid, you're sued for malpractice, the LLC is going to give you zero protection because it's considered a personal injury. So an LLC, no direct tax benefits, no direct liability protection. So I don't see any big reason to go through an LLC. Kind of the background on that, you have to file it with the state to open an LLC. Typically, you pay $150, $200 to set one up. Then annual fees after that, $150, $200 a year to keep one open. So essentially an LLC, if you want one, some people, I think it legitimizes the business in their mind. If you want an LLC behind your name, it's fine to do that. Just kind of be aware there's no direct benefits with that, which kind of leads into the S corporation. And I know I'm probably taking too much time. And two, if it's okay, Dr. Wilner, in the show notes, I'll link to a few articles that can kind of dive into this further if any of the listeners want to kind of to look at this
That'd be
further.
great. That'd be great.
Yeah, so the S corporation, again, that I feel like it's over recommended for most people, specifically in locums. And the reason why is that a lot of people just focus on the Medicare tax savings. And again, without getting too far in the weeds, if you have an S corporation, what happens is the S corporation becomes a separate taxable entity. And so you then become, as a business owner, both the business owner of the S corporation, then also a W-2 formal employee of that S corporation. That S corporation pays you a W-2 salary, monthly, quarterly, whenever. And so some people claim that, if you pay yourself a low enough salary, which that's a whole nother concept. It's what's called reasonable compensation. That's a very squishy number. I personally normally think it's higher than a lot of CPAs should use or do use. There can be some Medicare tax savings, typically never Social Security for locums, because you have to pay yourself enough as a W-2 employee, you eliminate any Social Security tax savings. So the only thing with an S-Corp you can have in most locum cases that I run is Medicare tax savings. And it is true, you can save $3,000, $4,000, $5,000 in Medicare taxes, no doubt, in some scenarios. What I think people lose sight of, though, is there are other things that change. If you're not a sole proprietor and you have an S-Corp, you're not just going to have Medicare tax savings. It also affects your federal income tax itself, usually because of what's called the QBID, the qualified business income deduction. That changes, and many times it goes against you. So it reduces that deduction. So it increases your tax bill on the federal income tax side. If you have outside W-2 work in that same year, it can really hurt your Social Security taxes. If you have an S-Corp, it can completely blow any savings out of the water if you have a separate W-2 job. So anyone that's listening that's working full-time as an attending physician doing side work, 1099, please don't get an S-Corp unless you really run the numbers. I've never seen it make sense. Other things to consider: state taxes, like the state of Tennessee. You don't want an S-Corp. They don't recognize S-Corps, and so they tack on a 6.5% extra tax called the F&E tax. There's local taxes you have to be aware of. You have to pay unemployment taxes. You're also going to probably have additional accounting fees. And so what I'm saying is, I know I'm going really deep here. If anyone recommends an S corporation, what you have to do is you have to compare side by side, apples to apples. So you want to have in one column sole proprietor. What's my federal tax liability? Social Security, Medicare, state, local, additional accounting fees, LLC fees, everything on the left hand. Then the second column, same thing for an S corp. And you want to see how everything changes, because typically what I found for most people that I work with, and they're in the income range, single or joint, filing jointly, they're making 220 to upper 300s. Most of the people I talk to, and for those people, what ends up happening is an S corporation. It does save them a few $1,000s in Medicare taxes, but they lose out and they pay an additional $6,000 to $8,000 in additional other taxes or fees. So they save $4,000, but they're paying $8,000 out of pocket. So they end up with, or $8,000 in other fees. So they end up with $4,000 that they lose. And I'm going to stop there. I know that's probably way more than you guys want to hear.
Jarin, before I let you add, I just want to say that, Ben, your explanation was very clear, and I'm confident that I understood 67% of it.
Oh, that's not good.
And it reinforces the reason that I asked you guys here, because this is definitely a subspecialty area that requires a lot of expertise. I was aware of much of what you said, but I don't have an S-Corp personally, and I hadn't explored it deeply, I'll say in part because of your advice. But it's important to know that there are a lot of things below the surface that, unless you sort of deal with this every day, and of course, the rules change also, and the rules are state specific. As you mentioned, Tennessee does this, Kentucky might be different. I don't know. Right. So it depends where you live. And then when you're a locum tenens doc, you might work in several states. Yes. So all of a sudden, this starts to be bureaucratically complex. So Jarin, what do you think about S-Corp? Should I get an S-Corp?
Yeah, no, I don't disagree, Ben, with that strategy. I mean, look, at our firm, I'm partner in Frost, Dana, Newman as well. And my partners down there have really shifted towards sole proprietor I mean, a lot of doctors come in the door wanting an S-Corp. And the challenges that you brought up are spot on. A couple I'll point out in addition to that. When you sign on with a staffing agency like ours at Fusion, we will not contract with a legal entity for med mal purposes. We can't. Our carrier does not recognize some, doctors LLC. So to your point, they're not getting extra legal liability protection by that structure. In fact, our agreement is with a natural person. It has to be. Right, the carriers, if there's a claim or concern around the claim, are going to ask for the contract from the agency to the provider, and they want to see that it's with a natural person. So they're going to disregard any entity for legal liability purposes. So that's one point. The second point I would make is multi-state tax issues, right? The reason why people set up S-Corps is because they're going to run payroll for themselves. Well, if they're doing it accurately, they're technically supposed to set up their LLC in all the states where they go and work. So if you're in 5 states, you need to go register with 5 taxing agencies just to pay for the unemployment tax and the state withholdings in those states when you go to work there. Now, to get around it, it's aggressive. Some will only register in one state and pay all their unemployment to one state. That's not entirely an accurate way to do it. It's an aggressive position for sure. So the multi-state issues become a problem. And the last thing is, to your point, right? These are highly compensated doctors. So to invoke a reasonable salary argument is tough. Where I think an S-Corp is valuable is for someone who literally is making under $200,000. This could be your CRNAs, your NPs, your PAs, and they're working in their home resident state only doing locums. That scenario, you could justify reasonable salary much better so that you're not just saving the Medicare portion. You'll be saving, maybe 30, 40,000 on the Social Security side in terms of wage base. That's if you get aggressive on the reasonable salary. And I think you can justify that for an NP, PA, or CRNA. Little tougher with a physician, I think, just because they're a classification of worker that the expectations that the IRS will have would be that they should be more compensated than the other group. So that would be my comment to really what Ben said. I don't disagree that, if a sole proprietor is, a substantially easier way to manage your business. Interestingly enough, Ben, 1/3 of our doctors, 1/3 of the doctors that come in the door and send us a W-9 do have an S-Corp.
Oh, yes, I certainly believe. Yeah, it's been my experience.
All right, we're going to kind of take a breather here. I'm going to ask you a different kind of question. And I want you both to give me a response. Because I was thinking about this. Which characteristics make for a good physician client from your point of view?
I'll let Jarin lead.
I would say those that have actually done a little bit of homework. Not a lot. If they do a lot, then it's like the problem is when people, it's not just doctors, when people who are not CPAs get by the water cooler and they hear ideas, they sort of come to you and want to push what they heard from their buddy.
Right.
Okay. Now that never works out well because you spend half the time correcting, inaccurate representations of tax law. But those that have been like, okay, I understand a little bit about how Social Security, Medicare works. I understand the difference between W-2 and 1099. I've done a little bit of research. That's a good characteristic. So to come in with some knowledge, but not try to, invoke what you heard at the water cooler.
Yeah, I think it's so I would say that, and Google sometimes very inaccurate advice. But yeah, I think overall, someone who's willing to listen. I'm a big believer. I don't expect any client to just trust me at face value, but I do want them to be open to hearing my reason. And so, it's basically like, as much as I can, I try to take a teacher type perspective. I don't think I'm smarter than the doctors I serve, but I do know more about taxes in that small field. And so if they're willing to listen, that's a huge characteristic I feel like that I'll look for. Just someone that's open-minded. And I tell people, I don't claim that I have all knowledge or I'm always right. But to Jarin's point, I do find that a lot of people bring in some baggage on some tax advice they've heard either through Google or through their colleagues that is not always right. So you almost have to undo some of that knowledge.
Well, I think the medical doctors who are listening to this will resonate, right? Like, it's great to have a patient who comes in and they've done a little research and they know what you're talking about. But the ones that come in and say, well, my neighbor took, this drug and now they're fine. It's like, well, it's like, or have you heard about this drug? I just read about this. It's brand new. It's like, well, it's pretty rare that the physician doesn't already know about something that landed in the newspaper. And your neighbor is probably not in exactly the same state of health as your patient. So that's interesting. It's good to get that perspective. Well, I want to back way, way up because this is something that took me like 20 years to understand, and I still don't have a handle on it. And Ben, I'm going to give this to you. It's like, you mentioned about these tax savings. What exactly is a tax deductible expense? Does that mean I don't pay taxes on it? I mean, what does that actually mean?
Yeah, well, we'll take a really, we're going to round numbers here, but let's say that you had $10,000 worth of unreimbursed travel expenses.
All right, so I'm a locum tenens doctor, and I'm flying back and forth, and the agency flaked out, they didn't pay the ticket, and I'm stuck with the bill.
All right. Just for argument, I know that's not typical, but let's just say it happens. You got $10,000 of expenses. What happens is you report that on your Schedule C on your business income form, where you report your income expenses. And what happens effectively is you save two basic forms of taxes on that. So that $10,000 deduction first saves you on federal income tax. So say you're in the 24% tax bracket, that's going to save you $2,400 right there in federal income tax, and then it'll save you another roughly 15.3% in the self-employment tax that Jarin mentioned earlier. So another $1,500. So in total, that deduction, that $10,000 deduction, will save you roughly $4,000 or 40% in ending taxes. Does that make any sense? So does it directly reduce your tax bill? It reduces your taxable income, and you pay a percentage on that taxable income.
All right. So you just take. Go ahead.
Yeah,
Jarin.
I was just going to say, I mean, a common misnomer, and this is not just physicians, right? Is everybody's like, oh, it's the end of the tax year, I'm going to go spend money so that I can lower my taxes. And the reality is, ask yourself this question: would you ever spend $1 to save 30 cents? Right? Because that's what a deduction is. You're only saving whatever your marginal tax rate is on that expense. The other word is credit, tax credits. Yep. Tax credits are dollar for dollar tax savings. So if I get $1 of tax credit, it will offset $1 of tax. But a deduction, $1 of deduction will only save you whatever your marginal rate is. Call it 30 cents.
Oh, that's very, very helpful, because I remember these the electric cars were advertised. This is a tax credit. And I didn't really understand that. But if it's a $5,000 tax credit, when your tax bill comes, whatever it is, you subtract that $5,000 from the actual total that you owe versus just getting a percentage. Is that right?
Yeah, correct.
All right. Well, that's pretty interesting. Well, here's a question for you, Jarin. Why work locums if there's no benefits, right? There's no health benefits. There's no retirement benefits, right? There's no health insurance. Why would anybody want a job that doesn't give you benefits?
Well, the reality is you can go get those benefits, right? You can go get them from the open marketplace, whether it's retirement benefits. Now, is there a match to it that an employer gives? Is it subsidized? No. The reality is it's based on really facts and circumstances, right? If a provider, if you travel to rural parts of the country, you can make more money. And you can work when you want, where you want. The flexibility is what I find that most physicians are seeking. Flexibility to work where they want, flexibility to work when they want, and flexibility to make the amount of money they want to make. So I don't think the reasons why a physician chooses locums ever start with tax reasons or with benefit reasons. It usually will start with non-business, non-tax reasons. And then you got to bring in advisors like us to help figure out and mitigate the tax issues and to help figure out the retirement and other benefit issues. That's what I find. I think a lot of physicians make the decision to not do locums because of those reasons. And that's fine. I think that's, circumstance based, but by and large, the majority are choosing to do locums for reasons that don't have anything to do with taxes or benefits. And then they just have to figure those things out.
Ben, are there any options for retirement that are actually better being a locums doctor than being an employee?
Yeah.
Is there an upside?
Yeah, I think there's definitely a potential upside. And I think it depends. It's situation dependent, like Jarin mentioned. Like you had mentioned in Kaiser earlier, they have really, really good benefits. So it's going to be hard. Even trying to match those on your own as a business owner will be difficult. But one thing that's really powerful for a lot of people that I work with is a solo 401k. That is a way for a lot of people that I work with to put a lot more back than they typically can if they were just a W-2 employee. Again, without getting too far in the numbers, for most of you working full-time locums, you could potentially put in this year up to $61,000 in most circumstances. And that's a $61,000 deduction.
And how does that compare to what a W-2 guy
W-2.
making?
So if you're in a private, you're probably going to have access to 401k. So most you're going to be able to put in $20,500 this year, plus whatever your company matches, which for a lot of people it's 3 or 4%. So maybe 25 grand, 26 grand, let's say in total, versus let's say 61 grand with a solo 401k. But it really goes back to what Jarin said. It depends on where you're coming from. What I found is nonprofit teaching type hospitals typically have a really good benefits package. But if you're at like a private clinic, typically the benefits package is much leaner.
Yeah, and the younger the physician, the less likely they're going to want to put in $61,000 into retirement.
Yeah.
The physicians that are over 40 will get more bullish on that for sure, right? Because the timing of their withdrawal is a little closer than a physician who's 30 versus one who's 50. And so look, it's a cash flow issue at that point, right? I mean, if you can afford to put that kind of money away, why wouldn't you? It's a great way to set yourself up for retirement, but also save on the taxes now. So it's a great strategy. Cash flow is where it becomes an issue. I get a lot of providers like, that's a lot of money.
Yeah, that's true. That's right. Yeah, I'd say it's kind of a split. I do have some young docs that are very, very aggressive in saving, but to your point, there's others who they have other goals. They might want a Tesla.
Yeah.
Right. Okay. Well, we're getting close to the end of the program, and I know you guys have a lot more knowledge that I haven't tapped, but is there anything else you'd like to add, Jarin, before we close?
No, other than the best tax strategy you can employ is one of organization, right? Keep your business expenses separate from your personal expenses. However you want to do it, just make life easier for yourself and for your CPA at the end of the year. A lot of tax deductions go missed simply because they're not being tracked. And the easiest way that I found to do it, and you can do it a lot of ways, is just get a separate credit card and put it all on there. Because then at the end of the year, it basically becomes your accounting, right? The credit card statements become your accounting, and you don't have to keep, QuickBooks or Quicken. If you did, that'd be great. But if you don't want to do that, let the bank statements or the credit card statements become your deductions, and just stay organized. A lot is missed because of you're not organized, and physicians are busy. So find an easy way that works and stick with it.
Ben, would you like to add anything?
Yeah, I would second Jarin. Yeah, very, very big on proactive planning. I think to his point, it's much better if you talk to CPA or just get your things in order on the front end versus waiting till the end of the year. A big thing is the solo 401k. Ideally, you want to have that set up by the end of the tax year. So you want to have it set up by December 31st. So there's things like that, estimated tax payments, that it's much better to take care of them on the front end versus trying to deal with them on the back end.
Well, so I should send you everything on April 14th. Is that when you want the?
Oh, that's perfect. Yeah,
the data
works out great. We'll have to extend.
All right. So, Jarin, how can I'm going to put this information in the show notes, but how can people get in touch with you?
Well, as the CFO of Fusion, I'm pretty busy in my role there, but I am a partner in a tax practice called Frost, Dana, Newman. You can find us at F as in Frost, D as in Dana, N as in Newman, fdncpa.com. If you want more information about, or if you're looking for a CPA that specializes in locum doctors.
Okay. And Ben, what's the best way to get in touch with you?
Yeah, probably just my website. It's just yourlocumstax.com. And I'm sure we can put that in the show notes.
Sure.
Yeah.
And both of you, I guess, work, these days, everything's on Zoom. You work remotely, so it doesn't really matter where the potential client has their domicile in terms of where they have their CPA. Is that right?
That's correct.
That's correct.
All right. Well, Ben Nanney and Jarin Dana, I want to thank you both for appearing on The Art of Medicine.
Thank you.
Thank you.
All right. Well, I learned a lot. And before we close, many thanks to The Art of Medicine's wonderful sponsor, locumstory.com. If you are interested in learning more about locum tenens or considering a new full-time position, please go to locumstory.com. I'm your host, Dr. Andrew Wilner. Thanks for joining the program. See you next time. This program is hosted, edited, and produced by Andrew Wilner, MD, FACP, FAAN. Guests receive no financial compensation for their appearance on The Art of Medicine. Andrew Wilner, MD, is Associate Professor of Neurology at the University of Tennessee Health Science Center, Memphis, Tennessee. Views, thoughts, and opinions expressed on this program belong solely to Dr. Wilner and his guests, and not necessarily to their employers, organizations, or other group or individual. While this program intends to be informative, it is meant for entertainment purposes only. The Art of Medicine does not offer professional financial, legal, or medical advice. Dr. Wilner and his guests assume no responsibility or liability for any damages, financial or otherwise, that arise in connection with consuming this program's content. Thanks for watching. For more episodes of The Art of Medicine, please subscribe. www.andrewwilner.com